Hey, folks, on today's Rebel's Edge, United Airlines soars on post-earnings profits. The banks continue to deliver as kicking off a very strong earnings season, and Novocure flies on the FDA's blessing of the first wearable device in the battle against lung cancer. All that and more on today's Rebel's Edge.
All right. I got my man Marc LoPresti with me today. We got John flying around all over the place. He's got things to do, and he's always busy doing something. But Marc, it's good of you to step in at the last minute. We really appreciate you, brother.
Thank you, sir. A little more casual than I'm used to, but that's okay. Folks can kind of see the softer side. And I want to just point out, Pete, This is not a MAGA hat. This is a MAVA hat. This is a make volatility great again. And as you covered yesterday, vol has finally started to creep up post 20 handle where we think maybe it ought to be some 24 days away from a presidential election in the very first innings of an earnings season, easing interest rate environment. We should see vol with a handle above 20.
Especially the fact that we don't know. I mean, what the race looks like is a damn close race. So it could go one way or the other, and obviously nobody's got the answer yet. Well, maybe somebody. I'm just kidding. All right, Marc, why don't we hit about the macro minute right now? And I'm going to say this. Earnings, to your point earlier, have been absolutely incredible, and I'm specifically talking about the banks. And when I say the banks, I mean the investment banks specifically also. We have had an absolute numbers that are crushing things, whether it's Goldman Sachs or JP Morgan or Citi or Bank of America. Today it was Morgan Stanley. Everybody's coming in and they're putting up some monstrous numbers, and that's helping the markets on the fact that here we are in a market where we are pushing, it seems like, a brand new record high almost every day. We get the pullback one day once in a while, but we have been absolutely screaming, and I give credit for the macro side of what's going on in earnings and what the financials are really putting up there.
Yeah, and look, most traders would have agreed with you a week or so ago that as go the banks, so goes the rest of the earnings season. I tend to be a believer in that. And look, part of what I like about the story of what we're hearing out of the banks is about risk capital. What am I talking about? Deal-making activity is back. We're going to cover some of that in more detail with Morgan Stanley. But folks, what does that mean when you see the revenue from the banks coming from these areas where there's renewed deal-making activity, there's renewed preparation for companies to go public, to raise capital? That's risk on, baby, right? And we've been talking a lot about the dry powder on the sidelines. There's been a lot of dry powder on the sidelines for quarters this year, right? 3 of them to be exact. And if we start seeing it come off the sidelines on top of the environment where we have interest rates coming down, on top of what we hope continues to be a relatively calm picture from a labor perspective, then I think we are seeing a continued bull run through the end of the year. This is certainly a good sign of it. That's my macro minute, Pete.
Yep, absolutely. Although we still got the elections and all how people decide what that means. All right, fantastic futures. What are we talking about? We've hit this time and time again, but Bitcoin, the fact that it's had a nice run, Marc, we're up 10% in the last week. This thing has been absolutely ripping to the upside and pulling along with it all the usual suspects, right? I mean, primarily I'll say Coinbase, but there are so many others. MSTR. Take a look at some of the moves that we have seen. It's been absolutely incredible. Then I look over at the 10-year, and thank goodness this is going in the right direction too, helping the markets out. It was at a 411 not too terribly long ago, just a few trading sessions ago, and now here we sit at 401 and pushing on 4 and maybe below. So with that, I think that we're seeing quite a very interesting view of the fantastic futures.
Yeah, there's no doubt a lot of traders talking about 69 as the next sort of support resistance level for Bitcoin. That tends to be what I see when I look at the charts. And I know, Pete, that you and John have talked about this a couple times in the past few shows, but I got to attribute it to a Trump bump. I mean, Trump's numbers are going up in polls. I know John likes to look at Polymarket and some of the betting rooms that cover these kind of things. Some of which, like Polymarket, has actually proven to be fairly accurate in terms of predicting outcomes. And without getting political here, there is a correlation between an improvement in Trump's chances of winning and the price of Bitcoin, which of course leads the overall crypto world. Harris was talking as recently as yesterday about need for renewed regulation, more regulation in cryptocurrency and digital assets. That's not what the crypto purists want to hear. We don't want a CBDC, God forbid. And so I think as Trump's fortunes go, so goes Bitcoin, because unfortunately, I can't see another catalyst for why this thing is looking at 69. And then after 69, it's got a 70 plus number on it, Pete, according to the technicals.
Yeah, it's amazing. And those names that follow are as important as Bitcoin for a lot of folks as well. All right, Mark, let's jump right into it. We've got 4 great stocks today. Very interesting. Morgan Stanley kind of kicking it all off because that is one of these financials. That is one of the biggest investment banks in the world. 52-week highs. Got over 121, almost 121.50 today. An absolute monster move to the upside. Now, Morgan Stanley has certainly been a very interesting stock. It was stuck and could not get through 100. Well, once we got through 100 and we've sustained that, now all of a sudden here we are at 121 and change today. New 52-week highs, as I said, it's up about 8%. Well, why is that? Well, investment banking. That might be exactly what it is. 56% year over year, it was up. That's pretty big numbers. When you look at what they're doing, you mentioned deal making and all the rest of it. It's also the trading side of things, which has been great. Their net profit has been absolutely year over year incredible, up 32%. There's not a number that I could find. And I said the same thing about Goldman Sachs, and I said the same thing about JP Morgan. I can't find a negative in the report. And for that reason, I think these financials are at least doing their job when it comes to earnings season right now in Q3.
Yeah, and listen, I like to try to point out, or we like to try to point out trends, right? Because the more we learn these trends, the more we can see them brewing and the more we can follow them. And the reality of it is, this is not a complete surprise. It's a bit of a surprise given how strong these numbers are, Pete, but the fact that they're strong and the fact that you're seeing growth in investment banking, growth in asset management, net inflows in the asset management side of things, does that have a correlation to the cost of capital coming down and interest rates coming down? Yeah, I think it does. So should we be completely shocked that there's gambling at Rick's Cafe right now, that famous line from Casablanca? No, folks, we shouldn't. When interest rates come down, cost of capital comes down, deal making is catalyzed to the upside, and when you've got the kind of dry powder I talked about at the top of the show that's been on the sidelines for so long, it's got to go somewhere. This is where it goes. I am not surprised again, Pete, that they're doing well. I am a little surprised that they're doing this well, right? Because again, as go the banks, so many say, go the rest of what earnings season looks like. So I'm feeling pretty positive.
Yeah, very positive. And these investment banks specifically are the ones that really stand out. All right, next up, Novocure, a medical device company. Now, they had some really good news. They got FDA approval on a wearable device to treat lung cancer. That's phenomenal. I mean, it's amazing what all these various companies, whether they're biotech companies or device companies, that they come up with something so great. What I'm not quite following right now, though, Mark, is the stock initially jumped incredibly fast, about 30% to the upside. It's given it all back, which makes me just kind of scratch my head a little bit. It sure did seem like everything that they put out there was good news. They got the approval, as we just talked about. This is an interesting stock because it's been as high as $220, Mark, back in 2021. And here we are talking about a stock that went from 16 to nearly 22 this morning. That was a nice big move. And then it pulled all the way back to 18. I'm not really sure. I can't explain it myself. I'm not sure why that it's pulled back the way it has, but it's certainly a name that I'm going to keep a very close eye on. I like what they do. They got very close to 52-week highs today. They didn't get there. It was 25 is the number, but they got pretty close at 22 early. But that was early, and then it immediately started to pull back. Pretty interesting move today for Novocure.
Yeah, for sure. I mean, obviously, people being quick to take profit, which of course we don't say is a bad thing. It's always good to take profits when you can, and don't look that gift horse in the mouth. That could have been what's going on here. But by the way, we talk about these biotech stocks in terms of phases: phase one, phase two. This was phase three. This was full approval. Go out and sell this thing, which I think is one of the world's first, if not the first, wearable device to battle lung cancer. Remarkable, got to save lives. The phase three trials clearly indicated that it was a life-saving device. It's part of why they got the approval as when they did, and as quickly as they did. Why it traded the way it did today, Pete, I don't know. We might need to look at the short interest, and I'll tease this. I know I've been teasing it a lot, and you're going to find out on November 19th, but we might be offering, Market Rebellion might be offering the cure for what ails you in terms of understanding short interest in names like Novocure. But I'm just going to tease it and leave it at that.
You're like butter, man. I love it. I love how you do this stuff. All right, next up, we're going to go to United Airlines. Now, United Airlines, Delta didn't really help much for the airlines last week. Now they had their earnings. Now you come back and you look at what United Airlines had to say. Well, holy smokes, Mark. I mean, this is a heck of a move, up about 10%. They crushed the earnings. They got a 333 looking for 313. They had revenue of $14.8 billion. It was looking for $14.77 billion. So they beat on that side as well. I really like what we're seeing going on right now with many of the various airlines, but specifically United. They absolutely crush it. Oh, by the way, we had some unusual option activity in this one as well. And they were buying the 72 call. There you got it. You got it right in front of you. You get a chance to see it. 18 cents. You know where they went this morning when the stock opened up at new highs, 52-week highs? They went as high as $1.12. 18 cents to $1.12. I'd say that's a pretty nice move. So they really did everything they needed. They've obviously gotten a little bit of help. When you look over at crude and you look over at, the fuel side of this thing, it's gotten a little bit cheaper. That has helped. And they are going after a lot of these budget airlines as well. So the combination of what United's doing is absolutely crushing it. And that 52-week high was hit today.
Yeah, and congratulations to all of our UOA subscribers that got that unusual in United. I remember when I saw that come out, it was yesterday, the day before, I was tempted to hit it. I didn't. I'm beating myself up for not taking advantage of that one. And yeah, it's interesting though, Pete. It's a mixed bag when it comes to the airlines, certainly as it relates to the majors versus the low cost and the ultra low cost, the Frontiers. One of my favorite airlines I love to hate, Spirit. Of course, we're looking to see what happens on October 22nd when those bonds mature with U.S. Bank that back their credit card facility, how that's going to be. We've talked about that on Cocktail Hour and some of our other shows. Labor costs, right? Certainly benefiting from fuel costs. And if the way that fuel is going at this point in time is any indication, that may be something that continues to buoy the airline's ability to actually make a few shekels between now and the end of the year. But the biggest bogey, I think, Pete, has been getting those labor costs under control. United was obviously able to do it very, very well. We'll see if the rest of the majors can fall in line behind United. We'll see. I'm not 100% convinced.
Right. No, I hear you. It makes some sense. What a nice big move to the upside today, however. Wave Life Sciences. Let's jump into that one now. They've got a great balance sheet. I think it's an incredible balance sheet. They're based out of Singapore. This is a very interesting company for sure. I look at them and GlaxoSmithKline. That's what stands out for me. Now, they had some great information they put out there, recent data that looks phenomenal. Everybody's excited about that. Oh, by the way, I don't think I pointed this out just yet. This thing has made a 75% move. This is a stock. This isn't options, guys. This is a 75% move to the upside. You want to talk about volume? They've got volume. They've absolutely crushed it. GlaxoSmithKline is the second largest holder, and not too long ago bought another 2.8 million shares at around $8. So I think that at some point, they're probably going to have a big enough position that they might just take the whole thing. I'm not saying that's going to happen in the near term, but they certainly have positioned themselves well. They're a very big part of what's going on here with this company. It's a great balance sheet, as I pointed out. They've got a lot of things going their way. This is a name to keep an eye on. I don't think it's a name that you're going to go chase right now, but I think it is a name that we all need to keep an eye on.
Yeah, there's no doubt. And they are in that sort of cutting edge technology of gene sequencing, right? mRNA and RNA sequencing. Essentially, for those of you that are not biotech and life sciences nerds, as Pete and I like to play on TV sometimes, this is actually a technology that enables addressing problems, diseases that are in the genetic code at the genetic level and stopping them before they start, right? By essentially editing that DNA, that genetic code that's present in all of us. So really, really remarkable stuff. And Pete, this is an AI play too. And you might say, well, geez, was everything an AI play these days?
Yes.
It is, and I will tell you why. What AI and upcoming quantum computing enables companies like Wave and others that are in this space of editing genes and editing that mRNA and RNA sequence is to be able to hypothesize those theoretical outcomes faster and more accurately using artificial intelligence, using quantum and edge computing before you ever touch a human being. This is part of the reason why AI, when you talk about the areas that AI will be expected to have the most significant and noticeable impact, I think it's in life sciences, and I think this is one of those examples.
No, I totally agree with you. Yeah, and that's the good side of AI. I think there's going to be some bad sides of AI as well.
Yes.
But we don't want to cover that yet, but that could be an issue in the future.
So I got a burning question for you. Because you are the NFL guy, right? When between the two of us, you've had lots more time on the field than I have. So I would say substantially more time, certainly in the pros than I have, unless you include the 5 minutes that I was on the field during Jets training camp in the summer. That may qualify. I'm not sure that it does. Oh, sure. But what is going on with all of the trades? I mean, is this an abnormal number of trade talk to hear, certainly at this point in the season?
I think so, Mark, and I think it is because the NFL has become so daggone competitive. We know about free agency, we know about the draft. That's all been there, and obviously this kind of activity too. But I think we're seeing more moves than we've seen in the past, for sure. And I look over at Detroit, for instance. They got Aiden Hutchinson. He just broke his leg, one of the ugliest breaks that I've seen in a really long time. And prayers out for him for a great recovery because he's a great young man. Shoot, I had to play against his parents back in the day. So, it gives you a little idea how old I am. But Hassan Reddick is one of these guys where he might go there. He's with the New York Jets, sort of, Mark, but he wants a new contract, and they don't want to give him one, apparently. And so because of that, this has gone back and forth and back and forth. And we know the Jets are willing to do a few things too because, well, by the way, they went out and got Devontae Adams. I wonder why they did that. Let me think for a second. He was in Green Bay. The quarterback was in Green Bay. That might have a little something to do with it, huh? I would say that Aaron Rodgers has a lot of influence on the team, whether he wants to admit it or not.
Yeah.
The coach and some of the players, and in free agency last year when they picked up some of the players from Green Bay, former receivers, all of that. He's almost like the GM at this point, playing quarterback. So there's a lot to be said about that. Then you got Amari Cooper. They needed a receiver up in Buffalo. They were having some struggles. They're winning games, but not doing it the way Buffalo wants to do it. So they went out and they get Amari Cooper from the Browns. So there's a lot of movement of bigger names. We probably not going to see a whole lot more, but I think it's pretty interesting that people are kind of shifting around right now, Mark. And the one thing that I just wonder really deep down is the Cleveland Browns, who I like. I know the coach pretty well, Stefanski, but I'll tell you something. They've got a quarterback issue, and I don't know. That's going to be something, a noose around their neck for a while. And I say that only because they're paying him a lot of money. He's not really giving them anything at all, and that is lock, stock, and barrel guaranteed money for a long time still from here. And, that's what happens with some of these quarterbacks. Look at Jacksonville. That they're another one. Trevor's not really doing what he was expected to do. He's got $250 million. So they need these quarterbacks to start performing at a different level, and they're not getting it right now, and that's going to be a problem. You might see a lot more trades and a lot of quarterback trades, whether it's during the season, probably not. But in the offseason, you might start seeing guys starting to want to offload some of these contracts to some of the other teams. But next up, how about the ownership side, Mark? This is something you and I and John could talk about. A few years ago, somebody tapped me on the shoulder when I was in New York and said, look, I know who you are. I think you're going to be interested. You want to go to this meeting. And it was just somebody I knew. And he goes, this is a meeting you might like. Well, fast forward to now, it was about the Raiders and what they were looking to do. And they had a little bit of room. Now, the problem was they were still in the Bay Area back then. And you had guys like Zuckerberg and all the guys with real money who really were very interested in possibly being in ownership in the NFL. Well, Tom Brady jumped over all of them, and Tom Brady now has 5% of the Las Vegas Raiders in a big move because he can afford just about anything he wants to do. So he's got 5%. Richard Seymour, his old teammate, defensive end, who was very, very good. He's in the Hall of Fame. He's just an unbelievable football player. He got 0.5%. Now, this is a group that's worth $6.7 billion, Mark. So they had to pony up big money regardless of whatever that percentage is. But it's something that Goodell is really pushing for, which is, hey, look, I love this. Let's get more players, retired players, to get involved with these teams if it's possible. And let's start getting that way. And I think that's part of what they're trying to give these guys the opportunity is, hey, look, if you had success and that kind of success, we'd love to have you as ownership in this because you know a lot about the sport.
Well, I got a question for you, though, Pete. And look, it's a remarkable story in terms of what these franchise values are. I love Goodell's idea in terms of getting some of these, former players and pros that are brand names themselves involved. It helps fandom. It helps viewership. It helps eyeballs, which, of course, is at the end of the day the name of the game. But is there a concern about a conflict of interest with Brady as somebody covering these games from the broadcast perspective, right? As a journalist, as a sports journalist covering NFL, is he going to be in some way, shape, or form influenced in terms of his reporting on the Raiders and their prospects?
Yeah.
Because of this ownership stake? And is that something that Goodell or anybody's even considered?
Oh, 100% consideration. Yes, they are considering that. And let's be honest, there's only so many guys out there that have the ability to even invest in these. And right. While they're doing that, I guess going through the process, and when you look at the 5%, it's a big number, but it's still just 5%. So I think that could they think that Brady is going to be, swayed one way or the other because of the fact that he's got this investment? I think most of these players are good enough businessmen outside of being great football players that I think that they can handle it, Mark. And I don't think that's going to be an issue. And I think that includes guys like Tom Brady where, they're intelligent guys. They do a really great job of dissecting the game. They know the game. And I think that they can step back enough, I think anyway, and I think obviously Goodell must think the same way. They can step back enough to say, you know what, I got ownership over here, but I still have to do my job, which is being fairly neutral. And I think, quite honestly, they might even be more critical. So on their own, teams and so forth when things aren't going well. So it could be pretty interesting, but that was a consideration for sure. And a lot of people talked about it. The other thing is, if Tom Brady owns these guys, 5% of them, he cannot come back and play. So there was always that, they were drifting that out there. Hey, Tom Brady's going to come back. He's going to come back. Guys, I don't think he's coming back. I didn't think he was coming back. He could, but I think he's very happy now, walked away and doing what he's doing and doing the announcing as a color guy.
Yeah, it certainly seems that way. And Pete, I think it's less about covering live action, right? A hit is a hit, a win is a win, things of that nature. I think it's more about, in terms of prognostication, what their chances are, where he thinks they'll wind up, mid-season, end of season, the playoffs, how that might impact, how Vegas and the betting world, thinks about these teams' prospects. So it's more whether or not it impacts the forward-looking view of Brady with this ownership stake. But it's an interesting development. Look, net, I think it's good for the league, and we're only going to see these franchise values continue to go up. And Pete, it's that time of the Rebel's Edge when, if I'm on, got to do my job as the CEO of the company. Sorry, folks.
Good.
But we were we had to, of course, for everyone's safety, the safety of our staff and our attendees and ticket holders, to postpone our Rebel Mastermind event. It was supposed to be this past Friday, the 11th of October. We are now hosting it on the 19th of November. Same location, Aventura, Florida. Same setup. It is after the two-day the two-day 10X Wealth event that we're doing with Grant Cardone and his team on the 17th and 18th. We've been able to move almost all of our ticket holders over from the October date to the November date. Those that could not attend on the 19th because of pre-existing commitments have decided to opt to come to our Las Vegas event. And if you were on our cocktail hour on this past Friday, and if you're not, I feel really sorry for you because we dropped a lot of unbelievable knowledge and some trades for this week that have already worked out pretty positively. But we are going to be hosting, Pete, our next RebelCon event, large-scale event in Las Vegas, Nevada at the MGM Grand on the 22nd of March. That's going to follow the two-day 10X Growth Con 10-year anniversary. We're expecting 8,000 people in the MGM Grand Arena. You'll be on stage with Grant. John will be on stage with Grant. I'll be on stage with Grant, along with an absolute A-list roster. And when I say A-list, folks, it is the top of the A-list of entertainment, music, politics, and business. So very excited. There'll be more coming out about that. That's our RebelCon event on the 22nd of March. And reminding everybody, we still have tickets available for our November 17 Rebel Mastermind in Aventura, Florida. And of course, you will see the tile with the QR code, the phone number there up on the screen. Please dial the number, click that QR code, check it out, grab your tickets while you still can. And Pete and John, I believe, because I think John will be not flying tomorrow at 1 p.m. Eastern time on another Rebel's Edge. Folks, thanks for watching. Pete, it's always a pleasure to be on with you, my friend.
Great to be with you, man. Take care.